All right, so we have some news that just came out, and not sure if it's good news or bad news. It's good news in the sense that it's obviously impacting the market because we can actually see some green, but it's bad news because if you watched my video yesterday, I need red. Like, I've loaded my accounts. I want to load the boat. I want to deplete my cash. So it's kind of good news and bad news for me. At the same time, it's only day one. Let's not jump the gun. It's only Monday. Okay, so we could still see some blood throughout the rest of the week. But we are seeing Airbnb. We're up 5.65%. Big C is just about red. Celsius as well is almost down 1%. Again, I think with Celsius, we're really going to need some news regarding the subpoena, which the SEC issued. And once we have information regarding the subpoena, I think that's where we're going to really see the stock take off. But up until that point, there's still a lot of uncertainty surrounding Celsius. Corsair Gaming, for once, is actually green, which is crazy. Facebook's up 2.73%. HIMS, guys, this is how you know the market loves this news. HIMS is green. I mean, what in the world? HIMS is up 1.16%, which is insane. We got OfferPad. OfferPad is crushing it today, up 12.60%. OfferPad is one of the positions that I'm really looking forward to building. I have about 60% of my position built in OfferPad. This is pretty much the number 2 to OPENDOOR. So I want to invest in the 2 best players in the iBuying space, and that's OPENDOOR and that's OfferPad. And speaking of OPENDOOR, OPENDOOR is also up 6.13%. Even Tattooed Chef, our darling Tattooed Chef, the chef, is up 1.58%. So pretty green across the board on the watch list today. So in this video, I want to talk about 2 companies that I've not spoken about before on this channel, but I think they will benefit from this news going forward. I'm going to put both of the companies side by side and try to determine which one I think is the best value going forward for the long-term investor. Now, what was the news that came out? And it was this, okay? So Dr. Fauci has pretty much come out and said that he believes that the Omicron variant, the severity is encouraging. I mean, I could have told you this 2 weeks ago. I mean, the South African doctor who actually discovered the variant has gone on record and said it's very, very mild. But, you know, of course, the media sensationalizing everything, causing a lot more fear and panic and stir. I mean, it sells, right? It sells. So we have some statements here from Dr. Fauci. So preliminary data about the severity of the Cironi Omicron variant. Oh, they actually put micron, so they made a mistake. The Omicron variant is a bit encouraging, says the White House Chief Medical Officer, Dr. Fauci. However, Fauci cautioned that more data was needed to draw a complete picture of the Omicron's risk profile. Okay, so he is erring on the side of caution, but he's pretty much said, look, the data is encouraging. I believe it's mild, just like the South African doctor said. Clearly in South Africa, Omicron has a transmission advantage. Although it's too early to make any definitive statements about it, thus far, it does not look like there's a great degree of severity to it. So on that news, I think some companies that will do really well coming off the back of this news is companies like Booking.com. I think Booking.com is another strong position. You guys already know I'm heavy in Airbnb, but I have been looking at Booking.com. I really do like it. Booking.com is pivotal for my own property business. It has a very wide moat, especially within the hotel industry. Not necessarily in the sharing accommodation type industry, but in the hotel industry, I mean, it's Booking.com. Booking.yeah, like there's no one competing with Booking.com. Some of the financial metrics you can find are a bit expensive. I mean, you got a trailing 12 months PE ratio of 227 again, but a price to sales ratio of less than 10 for me, which is good because I think this is still a fast growing company. Analysts are also very bullish on Booking.com. I mean, you have a high price target of 3,255, which represents a 44% upside from where we're currently trading at. Average price is 2,761.90, which is about 22.5% upside. The median is 2,755, a 22% upside. And then you have a low recommendation here of 1,908, which is a 15% downside. But again, if you just focus on the average between analysts' expectations and their price targets, that's still a 22% upside if you are bullish. And Booking.com also has a very strong balance sheet. If you take a look, so green represents the cash on hand and the yellow represents the long-term debt. And as you can see, for quite a long period of time, they had a lot more long-term debt than they did cash on hand. But in the turn of 2020, you can see there was that switch, there was that crossover, and now they're in a much stronger position where their cash on hand exceeds their long-term debt, which is something you really want to see. And let's get rid of those metrics. Let's take a look at the income statement. So let me quickly pop down to revenue. So you got revenue. Let's have a look at the net income. Again, it's been trending in the right direction. You have the net income on the upwards trend, and you also have the revenue trending upwards. So again, these are things you love to see. Let's get rid of this. Let's take another look at the current ratio. So if you're not familiar with what the current ratio means, the current ratio is a popular metrics investors use to compare current assets and liabilities. A current ratio, typically above 1, means that the company has more current assets than current liabilities, which generally means that the company should be able to handle its liabilities for the next year. Okay, so remember that a current ratio above 1 is very important. And if you take a look at Booking.com, it has fluctuated. I mean, at one point we got to 3.5, but currently the current ratio is above 2.48, which is very, very good. So it means, like we've read, within the next 12 months, the chances of Booking.com getting in danger is very, very slim. Let's take a look at another metrics from the cash flow statement, which I like to look at is free cash flow. It hasn't been that stable. I will tell you that. I mean, from 2018, they were free cash flow positive, and 2019, they got really close to turning free cash flow negative. But the most important number right now and the most important trend is that we are trending upwards. So the free cash flow is currently sitting at $1.5 billion. So I think Booking.com will benefit greatly from this news. You've seen they've got a strong balance sheet. They're free cash flow positive, and they've been trending in the right direction. Also, the income statement is headed in the right direction, which is very, very good. I think another benefactor to this news is Expedia. Expedia is another one. I would say they're number 2 to Booking.com. So if you are one of those people who you think Booking.com might be quite expensive, Expedia is another good one that you want to look at, with a market cap of 23.57 billion. Again, they're also in the hotel and restaurant industry. The price to sales is much cheaper than Booking.com, with a price to sales ratio of 3.2 and a forward PE ratio of 29.281. It's a much cheaper deal in comparison to Booking.com. But if you put the two side by side, there's a reason why Booking.com is more expensive than Expedia. First of all, Booking.com has the moats. Okay, they have the moat within the hotel industry. And also looking at the financial statements, if you see the free cash flow, Booking.com is already free cash flow positive, whereas Expedia is down minus 1.4 billion in terms of free cash flow. So again, that's not very good. Let's take a look at the balance sheet. Let's have a look at their current ratio. So again, Booking.com has a current ratio of 2.4, whereas Expedia has a current ratio that's less than 1 at 0.9. So like we've already discovered, we want a current ratio above 1. So you're not getting that with Expedia. So again, even though it's a cheaper option, it might not be the best option. And let's take a look at the revenue growth. Yeah, both of them have been trending in the right direction, which you love to see. Let's take a look at the net income. Let's see how they're both doing net income wise. The net income is also trending in the right direction for both of them. But what do you really want? I think Booking.com, even though they're a more expensive option in comparison to Expedia, Booking.com have a much more solid balance sheet, cash flow statement, and income statement, and they have a moat. So I think both of them will do really well. But if I was to invest in any of these companies, I think Booking.com would be the one for me. Now, you've got to be careful though with Booking.com, because if you take a look at some of the insider transactions, you can see the CEO here has been dumping a lot. Okay, a lot. So his shares have been depleting over time. You can see all of the sales so far. I think that, yeah, so in November, just in November, he's been pretty much cashing out. The directors also selling, well, sold this year. This was back in March. So yeah, insiders are cashing in and selling out. That's something you want to keep your eye on if you are deciding to invest in Booking.com. But I think Booking.com will be a great pick for this news. Okay, so let me know in the comment section what stocks you've got your eyes on. Like I said, I haven't started a position in Booking.com just yet, but it is on my radar. So I hope you guys gained some value from this video. If you did, please make sure you smash that like button. Stock Unlock is a great platform. I'm really loving this platform from Daniel Pronk. You can join the waiting list if you want to get early access to Stock Unlock, and the link will be in the video description below. I think it's an excellent platform. I'm getting used to it, and it's probably going to be my go-to for a while, because I mean, you even get all of the market news information here. But yeah, thanks so much for your time, and I'll catch you in the next one. Peace.